The CSI 300 now almost in a bull market again, but this, of course, as we continue to see levels, overbought levels across the board, is there still more room for upside?
I mean, yeah, you mentioned that it's overbought at this point, and you will see consolidations along the way. But I think the key thing to note is that the China cycle is just extremely different from whatever else is happening in the rest of the world. And that includes the rest of Asia, by the way. If you look at EM Asia ex China, that index tracks the S&P like they're going together. But the China market has been in a cycle of its own over the last 18 months, and this time it's working in its favor. You mentioned policy easing going in China's favor at this point versus tightening in the rest of the world. You have China also being a much more resilient to the kind of outflows and funding conditions pressures that we're seeing in the rest of the world. And all of this puts together China in a very good stead, keeping in mind that Chinese equity market is still at extremely cheap valuations compared to the rest of the world too.
Are there any parts of that market that you would prefer, given that, of course, we have seen regulatory crackdowns in the property sector, in the tech sector, in the education sector? Do you think potentially most of those measures are done with?
I think the other thing that's happening in global markets right now is really since, I would say, early May, where there's been a significant rotation in terms of styles, where value has started to underperform quite notably and growth has started to outperform. And you can see this across markets, across sectors, across stocks. And the convergence that we're seeing right now is really quite dramatic. And we do think that this continues in the near future. But what that translates to from a China market perspective is that the stuff we really like is the internet, is the green ecosystem, is the healthcare stocks. All of these are very strong growth proxies. And also they fall in the bucket of, some of these fall in the bucket of quality stocks, which is also something we like as a reflection of resilience in these challenging markets.
Broadly speaking, Mixo, it seems like there's so much talk about recession, whether we've reached that peak inflation, have we reached that peak hawkishness? Can I start factoring in maybe a Fed pivot for the second half?
Yeah, we are all guessing here, right? So it's just my guess versus someone else's guess versus your guess. So it's who knows what Powell is thinking, and even at this point, I would say that he hasn't made up his mind, right? Because the data it continues to change month to month. We did not expect this inflation surprise in May, and so that completely throws a wrench actually in the way that we were expecting the inflation trajectory to come down. But you think about this at our current forecast, U.S. inflation on a quarter-on-quarter seasonal adjusted annualized rate, it falls from 8% to 7% in 3Q, but it falls to about 2% by 4Q. So the sequential price pressures are definitely expected to slow quite a lot. And so there could be room for the Fed to start being less hawkish on the margin. And again, this is something that we noticed in the early May FOMC as well, where for the first time the FOMC rejected a hawkish option presented to it by the market, which was of a 75 basis point hike at that meeting. But again, the inflation data did change things a little bit.
I have to wonder, you just came out with your second half report. Maybe in just a few minutes, you could highlight just what are the key takeaways, right? You mentioned China as a standout. You said remain constructive around Asia. What does that mean?
Yeah, so I think we have about 18% upside in Asia ex-Japan overall, but almost all of that comes from China. And so that's really the key message, that within really global markets, China is the least unbuyable market at this point. And so, if investors looking at challenges in all the markets, China really stands out as something that offers a resilience or safe haven from many of those risks. The second thing is about the style rotations. And at this point, we like quality growth and parts of value. We think low wall is extremely crowded and overpositioned and will underperform. And we also think that the kind of correlation spike that we saw in March and again in April, May, will lead to a reversal in trend performance. So momentum as a style will underperform quite a bit. The last thing to note is in terms of our thematic exposures, we do like China internet, we do like countryside exposure. We also like a dual track exposure to energy, where you like both traditional as well as the green ecosystem.
Mixo, how painful could it get for developing nations across Asia if we see a stronger U.S. dollar? And do you envision a scenario like that?
Yeah, I would say that's probably the biggest risk to Asian equities outside of China. And this is something that we're seeing, that Asia inflation is now catching up with a lag to what's happening in developed markets. And as a result, we expect in the second half, Asian central banks will be catching up with a lag to what's happening in the developed markets. I think the key thing to keep in mind is that so far we haven't seen that much of an impact to growth. Some of that will come only in 2023. So it's still a bit of a waiting game to see how much that pans out.